Hello, everybody. And my name is Kevin Drover, and I'm the President and CEO of Aurcana Corporation. We're a silver company. I'd like to give you a little bit of an overview of what we do. First of all, we have two projects, both located in the continental United States. One in Texas, which is fully permitted, has a mill built, and it's currently on care and maintenance, pure silver play. We would look to that, bringing it onto production sometime in the future. The primary flagship of our company right now is the Revenue-Virginius mine, located in just outside of Ouray, Colorado. And it is production ready. It's fully permitted, mill on site. Everything we need is in place to go to production. So from an investor perspective, we're in a very stable jurisdiction in the United States, in good jurisdictions. We're fully permitted for immediate production. We have an excellent management team on the ground down there, done some excellent work. We're a precious metals hard rock mine with base metal credits. The Revenue-Virginius mine does have gold, lead, and zinc credits. Feasibility study is complete, and we have development underway at the site right now. We're low cost of production, right around $8 an ounce, strong cash flow potential for the future. We're 9 months from the day we're funded to positive cash flow. Existing mine, mill, and infrastructure is in place, and we have excellent upside to extend the life of this mine well into the future. Here's just a quick picture of the layout of the surface. Very little of the workings are on surface. The mill is located underground. Of course, all of the mine workings are underground as well. Location-wise, we're not very far from Denver, easy to get to. You can drive from Denver. It's about a 7-hour drive, or you can fly into either Grand Junction or Montrose. And if it's Montrose, you're about a 30-minute drive to the mine. A little bit of background. I'm not going to go into this very much. This is self-evident. You can read it, but just the pictures on the side is just a quick picture of the revenue tunnel itself that accesses the various ore bodies, and the lower picture is just a picture of the vein itself. Here, I won't again spend a lot of time on this. The key here is that we've got a proven and a probable reserve based on the feasibility study. Our all-in sustaining costs are $8 an ounce, an NPV of 75 million, and an IRR of 71. Numbers in terms of prices used in the feasibility are below, and you can see that it generates excellent cash flow. This is an important slide. We have 9 major veins on the project. We have resources, virtually all of our resources are pretty much on the Virginius vein. We do have some on the Yellow Rose and the Terrible vein, but primarily virtually all of our reserves and resources are on the Virginius vein. We own about somewhere between 16 and 20,000 feet of this Virginius vein continuously. Our current reserves are located on about 4,000 feet of that, right in this area, right from there to there. The yellow area is where the mill is located underground. The revenue tunnel right here that I'm showing by my cursor, this is 7,800 feet long. It accesses all of these veins and provides us access to where we're first going to start up on the on the Virginius vein itself. The resources and reserve tables, we won't go into these. These are very self-evident. You can review them at any time that you want. This is an interesting slide. It just gives you a little bit of an idea of the regional area, or the region that we're actually in. There's been thousands of mines here over the last 150 years. Probably the most prominent has been the Eldorado mine that was owned by Newmont, operated for in excess of 100 years. This will give you a little bit of a picture of the assets that we have on site. The mill, as I said previously, is located underground. Just give you a bit of a picture of the crushing circuit to the right, the flotation circuit, and the milling circuit itself. This is practically brand new. Very little tonnage ever went through this mill, and we'll be ready to start it up once we're fully funded. This is it tells a lot about where we're going here. The gray area in the middle, this one right here, this is the historic workings. This mine operated from 1876 up to 16, somewhere around there. They took 25 million ounces out of here of silver, some gold, of course, and lead and zinc as well. But the average silver grade coming out of this during that period was over 60 ounces per ton. The blue and the pink areas that you see here, this is our current mine plan. This represents our proven and our probable reserve. This is, of course, measured and indicated resources, but we have a reserve on top of this once, of course, we put the mine plan on it. So these are the areas that we will be mining. The blue area up here is where we're going to be mining first. And that's, of course, the grade up here is 55 to 65 ounces per ton in that neighborhood. Interestingly enough, this area that I'm showing right here in the orange, this is not in the mine plan. The only reason it's not in the mine plan is simply because we didn't have sufficient information. But logically, we've got indicated resources here, we got indicated resources there. This, in all probability, is going to get mined. So we're doing some work right now. We're going to be coming up here. We're in the process of getting up there right now. We'll be drifting along right here on the 1500 level, and we hope to bring this into a reserve category sometime this year. The interesting part, of course, longer term, with this area up here, we're going to have 6.5 to 7 years, about 7 years of mine life. Over here, long term, we think that we'd approach this area in 3 phases. We believe there's at least 25 million ounces in this area. We have all of the information from the old workings, all of the assays, all of the samples, and the information from back in the early part of the last century. We think it's going to cost us about $6.5 million per phase, and we think in total we'd see at least 25 million ounces coming into the resource and reserve category. Interestingly enough, until very recently, we didn't own this bluegrass claim, so there was an interruption in the Virginius vein, and what I'm showing you here is actually the Virginius vein itself. And it's we now own all of this. The bluegrass claim, we're going to be doing a drill program, and just show it right here this summer. We hope to have assays coming out sometime late July, early August kind of thing, and this could be a bit of a game changer for us. The schedule here, once we're funded, 7 months to first ore to the mill, 9 months to production, just to give you a little bit of an idea of the timeline here. So we're very, very fast, very quick to production. A little bit on market comparables. We're one of the highest grade mines in the world for highest grade silver mines. Don't know of anybody else with a proven and probable reserve as high as us. All-in sustaining costs, one of the lowest. On a pure silver basis, we're $8 an ounce. On a silver equivalent basis, we're $10.71 an ounce. So in summary, a very robust project, fully permitted in stable jurisdiction, ready for production. We're currently doing pre-production development right now. We have approximately 40 people on site. We're ready to go. We're in talks with various funding groups to get us the funding that we need for the pre-production development, get ourselves into production. We're debt-free. We have a very favorable share structure. We have a long-term major shareholder that owns 46% of the company, who's very, very supportive. Thank you.